Welcome everybody, and today we are going to discuss about ICDS 5. Yes, what we know about ICDS 5 is it is about tangible fixed assets. Chalo, let me ask you certain questions. If I say land, building, plant, machinery, furniture, what will you say? Sir, these are fixed assets. If I say goodwill, patents, copyrights, trademark, loom hours, sir, you will say that these are also fixed assets. But what is the difference between the earlier one and this one? When we spoke about land, building, plant, machinery, furniture, they are tangible fixed assets. And when we are talking about goodwill, patent, copyright, trademark, loom hours, license, franchisee, they are intangible fixed assets. So when I am talking about this ICDS 5, I am only talking about tangible fixed assets. Clear? What is the scope of this ICDS? What it covers actually? We have to understand. But before that, a small question. We are discussing income computation disclosure standards, correct? When we are discussing income computation, what these fixed assets have to do with it, right? In accounting, these are balance sheet items, right? What it has to do with P&L account, that is income determination. This type of question should arise in your mind, and the answer is, on the value of these fixed assets we provide depreciation under section 32. So to calculate correct depreciation or fair depreciation, we need to determine the true value of the fixed assets, and that's why this ICDS plays a role. So let's understand the scope. This ICDS says that tangible fixed assets means land, building, plant and machinery, furniture. Now it does not put an end here, it's not full stop. It just said about the nature. Example. Now what is the nature? They are held for production of goods and services, or production of goods, manufacture of goods, and they may be used for provision of service. Right? For rendering services also, the machineries, plant may be used, correct? So any fixed asset which is used for production of goods, manufacturing of goods, or for rendering of services, that is actually called as tangible fixed assets. They are not held for sale in the ordinary course of business. Like example, if I have a coaching center, in that lot of tables, furnitures are there, for me it is a fixed asset. For IKEA showroom, it is stock in trade, because for them they deal in furniture, right? For them they sell in the furniture, correct? In my office, the ACs which we have set up may be a tangible fixed asset for me. For AC showroom, it is not a tangible fixed asset, it is stock in trade for them. So this differentiation we should be able to make. I'll tell you one story. You tell me what word it denotes. Rather than regularly teaching, it is better that asking questions and you also think on your own. We generally have seen in the olden times, and many a times we see that when people were to purchase cars, on the back side of the car there was a same tire which is kept, correct? It is not used for traveling as of now, but it is kept as a stepney. In our households, we use inverters. If suppose electricity gone, what to do? To support with electricity, inverters are used, generators are used. So now what these type of assets are? These are basically standby equipments. These are called as what? Standby equipments. Now their usage is not important. Are they ready for usage? That's enough. Standby equipments are such assets which will support us when the original collapse. When the tire puncture happens, then this tire will help us. We'll fix the tire and continue our travel, right? If suppose electricity gone, we'll use inverter. So these are standby assets. And similarly, service equipments are also there, right? Some big machines may be used for repairing another machines. So service equipments are there. These are also capital assets, and these are fixed assets. So it should be added to the cost of these are added to the fixed assets. These are treated as fixed assets. Similarly, what we talk about spare parts, like loose tools are there, nuts are there. What to do with it? If suppose they are general loose tools, general spare parts, which are used anywhere, and they are commonly used in the business regularly, then in that case it is considered as expenditure and deducted as expenditure under section 37 of the Income Tax Act. Under section 37 of the Income Tax Act, if it is PGBP head, if it is other sources, under section 57 it is deductible. Clear? Very good. Because it is revenue routine in nature. But suppose certain spare parts are there which are used only for a particular fixed asset, particular plant and machinery, then and their usage is not regular. In that case, what we can say, that they will be considered as a part of fixed assets. Okay, whenever they are used, they are capitalized, they are added to the cost of the asset. Same way, regular general routine plant and spare parts are used, then they will be treated as cost when they are used. Same way, when irregular spare parts are used, they are treated as cost of fixed assets and added to the fixed assets. So difference you should be able to understand. Is it general? Then P&L account item. Is it rare, specific to the asset? Then add to the cost of fixed assets. Clear? Chal. Now, when we understood this, we are clear with what is the scope. One more thing I'll add to you, that we should understand how to determine the cost of the fixed assets, right? Because if we are not able to determine the cost, how will we provide depreciation? So for that we need to determine the cost of the fixed assets. So let's understand. First thing, suppose the purchase price of the fixed asset, that is anyhow the cost, correct? The purchase price of the fixed asset is the cost. Then any taxes are there, like GST is there, that has to be added, correct? So that if we suppose import, then customs duty will be there, so that will also become the cost. But when it is GST, if we get the credit of it, if customs duty, if we get the reversal of the money, duty drawback we get, or we get the cash back from the government, then don't add the taxes to the cost. If suppose we are not going to get it back, it is incurred, that's it. In that case, add to the cost. Any attributable expenditure, like example, transportation is there. From wherever we purchase, from there it should reach here, right? Installation is there, right? Setup should be done, right? Basement should be prepared if it is plant and machinery, correct? So that all will be added to the cost of the tangible fixed asset. I feel you are clear with what I am saying. Same way, sometimes what happens, the goods are purchased, so fixed assets are purchased, but we don't make the payment upfront. We take a loan, and that loan has to be paid slowly, especially if we take it from foreign country. Then whatever the exchange fluctuations is there, the dollar, Indian currency, exchange fluctuations may happen. That exchange fluctuation, whenever it happens, that fluctuations will either be added or deducted. Suppose example, we had to pay more, then definitely added. If we had to pay less, should be deducted, right? Because of the price fluctuation, this will happen. Same way, if because of any price change, if because of any taxes change, any impact happens on the cost of the asset, that should be reasonably adjusted. Clear? No doubt? Very good. Shall we go to the next story? Administrative and general overheads are there. Should we add it? The answer is no. We should not add. Why will we add administration expenses to the cost of plant and machinery or cost of fixed assets? No, we will not add. General overheads, not at all, we will not add. But suppose example, in a company, only for purchasing capital equipments, there is a separate department. Only for purchasing plant and machinery or equipments. Then it should be added, right? So this is how we should be able to interpret. So administrative and general overheads are not added to the cost of fixed assets. But if there is a separate department in the organization which deals only with purchase of plant and machinery, then definitely it should be added to the cost of the fixed assets. If any part of the administration is attributable, specifically done for the purchase of fixed asset, usage of fixed assets, then that can be added. Correct? Usage you ignore, only purchase you consider. Okay? Now, sometimes what happens, there are some regular expenses which are incurred, like setup expenses are there, or commissioning expenses are there. Basically, I can say installation only. Okay, installation, setup, right? We also do trial run to check whether the machine is working or not. So whatever expenses are incurred in relation to this, setup, installation, trial run expenses, all that are added to the cost. Now when I already said all these things, I will also have to say, if there are trial run incomes, that we will deduct. If there is any trade discount, that we will deduct. If there is any rebates, that we will deduct. If government give any subsidy for purchase of such assets, then that we will deduct from the actual cost. Like this, you should be able to understand that what should be added, what should be deducted. Anything which actually increases the long-term capacity of the asset, increases the long-term capacity of the asset, that should be obviously be added. If it does not add, if it is routine expenditure, will not add to the cost of the fixed assets. Clear? So what is actual cost? We understood. So again repeating for you, purchase price added, taxes added, apportionable expenses like transportation or their installation added. Then if there are any administrative expenses, general expenses which are attributable to the product added. Any changes due to foreign exchange fluctuations, they are added. Any interest, I will tell you, incurred, paid for the purchase of the asset till the asset is put to use, right? Till the commercial production starts, that also will be added. Interest paid outside India, even after the asset is put to use. Okay, because of the price fluctuations, if we are paying extra money, that all should be added. But trade discount deducted, subsidy from government is deducted, duty drawback deducted. Clear? Rebates are there, deducted. So this way you should be able to remember that what we have to deduct also. Now, okay, when we purchase the asset, this is what we will do. But suppose if we constructed the asset, building construction, correct? No. Why? ICDS 3 will deal about it. Construction contracts. So when here we are talking about self-generated asset, we are talking only about construction of plant and machinery, furniture, fixtures, all such things we are discussing about. How the treatment should be? Same as discussed till now. So whatever I explained till now, same way you do the treatment, that's it. Nothing special to think about. Whatever raw material purchase, labor charges, add to the cost. Whatever transportation charges, add to the cost. Any incidental installation charges, add to the cost. Minus whatever we have been like government subsidy we got, we'll deduct it. So same thing as we discussed till now, same treatment, nothing different, even if it is self-generated asset. Now you may ask a question, sir, if suppose 3-4 departments are internally working and they book their profits in the construction of the self-generated assets. In accounting, such booking of profits are allowed. Departmental accounts, you would have seen, right? But here in income tax, nothing as such entertained. So you cannot do so. Oh, we will book profits. No, ICDS don't allow booking the profits. So any internal profit element is there, that should be removed from the cost of the self-generated asset. Clear? Very good. But one question, if suppose there is no monetary consideration, then what to do? Suppose example, we purchased the asset, but we did not pay the money. We gave the shares and we got some plant and machinery. Like, I'll tell you a very small interesting story, joke, not relating to subject. But one painter was there, he had to paint the building of Facebook. Now Zuckerberg did not have money to pay. Zuckerberg, at the start I am talking, not today, very start when Facebook started, he did not have money to pay. So Zuckerberg gave some shares to that person to paint the building. And now that person always remembers the day when he painted Facebook building. He is now a millionaire. Great luck, right? All such lucks should come to you and me. Chalo, let's continue with the discussion. So what I was talking about? I was talking about non-monetary consideration. Suppose I gave the shares in my company and I got plant and machinery. I gave some shares in the company. I got furniture. In that case, what to do? Simple. The fair market value of the assets which I received, that means the furniture, the plant and machinery, will be treated as the cost of the asset. Now whatever I gave, ignore it. What I got, what I received, that asset's fair market value is important. So the fair market value of the assets which I received should be considered as the cost. You may say, what is fair market value? Fair market value is basically the market value or price fixed by a bargain between a knowledgeable seller and a knowledgeable buyer. अब दोनों भी होशियार है, right? So nobody want to lose. So they will come and fix certain price which is fair, right? Seller will not be ready to sell for less. Buyer will not be ready to buy for more. So whatever is fair, that they will fix. So this is what fair market value. So if you get some asset, right? You issued shares or you gave the asset and in return you got some tangible fixed assets. What is the value of it? The value is fair market value of the asset received. Clear? And fair market value is the price which is fixed by knowledgeable willing buyer and knowledgeable willing seller. Same way with shares, debentures, nothing special. Correct? Right. Next thing. If suppose there is improvement case, suppose you did improvement. Suppose your plant capacity is to produce 10,000 tons of a particular product. Now you added some more parts to the plant and machinery and now it is producing 15,000 tons. So we can say that there is addition in the capacity, right? The capacity increased, yes or no? So if there is a capacity increase, then it will be added to the cost of the asset. The whatever expenditure incurred for adding the capacity, increasing the production capacity, that will be added to the cost of the asset. One more thing I'll share with you, very important. Sometimes what happens, whatever we add, we can separate it. So in that case, what to do? So in that case, that asset should be treated as a separate asset and it should be valued separately. It can be separated, right? it itself is an independent asset on its own. So in that case, why will we add to that asset? We will keep this asset independent, right? In valuation I am talking about. In manufacturing process it may be connected to the original asset. But in accounting, if it has separate value, not in ICDS, if it has separate value, treat it separate asset. Accounting also follows the same, don't worry. Now you may ask, valuation करेंगे क्या सर? हाँ करेंगे, जरूर करेंगे, right? I generally give you building example that if already 5 floors are there, then if we add 2 floors, it is improvement. Now that example does not fit here. Why? Sir, because ICDS 3 on construction contracts cover it. Very. So when I am talking about ICDS 5 on tangible fixed assets, you should remember that here capacity increasing is all about either fixtures or about plant and machinery, any other asset but not building. Clear? Right? Now valuation. How to value? There are some odd cases which I have to discuss. Suppose I want to purchase a plant and machinery but I don't have so much money. My friend also want to but he don't have so much money. So we together purchased plant and machinery. It happens actually in garments industry. The machine cost is huge but this supplier don't have that much capacity. So a conglomerate of suppliers come together, manufacturers come together and purchase the machine, and they use it on hourly basis. They will have a proper agreement that this manufacturer will use for 4 hours, that will use for 4 hours. Like that they enter into some deals. This type of rights are called as loom hours. We call it as what? Loom hours. So what I basically said to you, that if suppose 2-3 people together own a particular fixed asset, whether it is plant and machinery, furniture, or as the case may be. Maybe a vehicle, transport vehicle also, right? It is also a tangible fixed asset, right? So in that case, what is the proportion of ownership? Suppose example, I hold 40%, the other hold 30%, other hold 30%. If 3 people purchase and 40-30-30 is the ratio. In that case, that 40% which is attributable to me, 40% of the cost, I'll treat it as cost for me. On that 40% value only I'll give depreciation and I'll calculate WTV. This is what people do. Okay, because we don't have complete asset, but we have proportion. So for that proportion only we'll consider as cost. For that proportion only we'll claim depreciation. This is all in case of joint owners of a particular asset. And joint owners are all independent entities. So what to do? Proportionate. Cost should be considered for income tax purpose. Proportionate depreciation should be claimed for income tax purpose. Now come to the next story. If suppose I purchased not one asset, multiple assets for a single price. So I purchased 5-6 assets for single price. Now I don't know what is the price of each asset separately, but I purchase all together for single price. Slump sale, yes, slump sale. So how to value? Then each asset should be given separate value. How? On the basis of fair value. So what is the fair value of each asset? Get it from the market, then create a ratio, and in that ratio, whatever your consideration is there for purchasing the asset you paid, right? That you should appropriate. Chalo, I purchased furniture, plant and machinery and building. 3 things I purchased by paying 5 crore rupees. When I went to the market, I asked that they said building is of 3 crores including land. Chalo, we will not consider land as of now, okay? So only building 3 crores, furniture 1 crore and plant and machinery 1 crore they said. Then 3:1:1 ratio comes, correct? Like that we have to divide. This way you should do. Now they will tell you basically the fair market value, and our consideration is different. So our consideration, we have to divide it into that ratio which we create on the basis of fair market value. This is how we should do actually the valuation of in special cases. Now, is revaluation allowed? In accounting they allow revaluation, right? If there is a permanent change in the value of fixed asset, then we have to do revaluation. This is valid in accounting standards, right, in accounting standards. But ICDS don't allow any valuation. No revaluation in ICDS. Okay, clear? Suppose example, you sold the plant and machinery furniture and you get capital gain on it. So what to do with it? It is dealt with under Income Tax Act, under Income Tax Act. So basically what I am telling, it is dealt under the Income Tax Act. Array section 45 capital gains re baba. हाँ, section 45, only section 45. 45 1A 1B भी चलेगा based on the situation. But presently remember that if a capital asset, if a fixed asset is sold, it is capital gains. Okay? Yeah, sir. Suppose example, I have plant and machinery, but I am a person dealing in plant and machinery. So can I say it is fixed asset for me? For Maruti car showroom or Maruti car company, for them car is not a capital asset, it is stock in trade. Now in India, there are many companies now which are entering into manufacturing drones. Yeah, fighter drones, surveillance drones. There are many companies which are into making aeroplanes, Tejas aircraft. Now what you are observing about India is not that old India. Presently we are the superpower and India's GDP is growing, competing with the top countries in the world. So when India is growing, it is the right time we also grow in career, focus on education, definitely focus on creativity, innovation, you can make a wonderful career. Let's continue with the discussion. So revaluation not allowed under ICDS, I said. Then I said if there is any sale of capital asset, fixed asset, it is taxed under Income Tax Act 1961 under section 45, capital gains we discussed. If suppose any capital asset is there, if any expenses we are incurring to make the asset ready for usage, right, or we are paying interest on it, so till we start the commercial production, all such expenses, whether it is trial run expenses, setup expenses, installation expenses, interest expenses, till it is put for commercial production, we will add to the cost of the asset. Any doubt? Disclosure is quite obvious yaar, kya bolna, right? Trial run expenses you will add and trial run incomes you have to deduct, don't forget. And disclosure to मालूम है ना यार, cost of the asset, WDV of the asset, the rate of depreciation, which method you followed. Only in electricity companies either straight or WDV method, but in all other cases only WDV method. Like this we should be able to give proper disclosure on ICDS 5 on tangible fixed asset. That's it, we completed this ICDS. We'll meet in the next lecture.